Hey, what is up guys? This is the Stock Estate here, your financial bro, and today, welcome back to the video, and today I'll be giving a really quick SPAC update. Okay, what happened yesterday on Monday and what should we be looking out for? So today, the table of contents will go like this. Today, I'll go a little bit of update on SPACs for yesterday, okay, insane day yesterday. Okay, and secondly, I'll be talking a little bit more about one key thing that I'm looking for, okay, which is crucial for Tuesday, Wednesday, and actually for the rest of the week, but especially crucial for Tuesday. And thirdly, I'll talk a little bit more about some of the SPAC plays that have not really been running up yet, and I'll explain how I do my due diligence, so really stay tuned for that. And let's get into it right after the intro. Let's go. Okay, so welcome back to the video. I'm the Stock Estate. I'm an ex-financial advisor here, bring you great content here on YouTube. Okay, so for my new subscribers, welcome. Type down in the comments section below what kind of video that you wish to see. And for my new viewers, subscribe, join the community of investors. We are investors who plan for our trades, plan for when we entry, and as well as for long-term investment wise, we also plan to put in money where the investments are the best ones there is. And to everyone that are here, thank you very much. A like button will really help out the channel and encourage me to put out more great content like this. Okay, without further ado, let's jump straight into it. So, a little quick update, that was an insane start to the week. Okay, we look at yesterday Monday, right? Okay, HCAC, up 35%. Oh my god. Okay, and the thing is, right, okay, look at this insane run, right? Look at the first thing is the moment the market opens, it was already up massive. Okay, it was already at 1730. Okay, then it proceeds to run another like 6% more to the rest of the day. Okay, but it's already up like 20+% at least, when market opened, and it stayed consistent throughout. So there's not really any point where you can take a breath or wait for a dip there before you take a breath, or it's just there, and for any of you who have bought since market open, right? So this, I give you my thoughts on it, alright? So we look at this huge run up here, okay? It's not showing any signs of slowing down, okay? It's just shooting up a lot, okay? Massive, okay? And honestly, what I'm going to talk a little bit more about is amidst all the greed, right? Stay fearful. Okay, it's very easy to think that, all this, this will continue to rocket forever, but I tell you, it would definitely not. Okay, so stay fearful. Okay, I'll elaborate a little bit more in a second. Okay, so let's look at other SPAC plays that's out there. Okay, so you can look at QS, Kensington Acquisition Corporation. Okay, up massive. Okay, last 5 days, right? Okay, since the dip itself, right? It came out to $31, right? Oh, all the way up, 39% up as well. Okay, simply insane. Okay, up so much. Okay, popping up as well. SBE switchback, which is merging with ChargePoint. Okay. After the huge dip around here, you can see how fast it dips, right? Okay, 16%, okay, but reversed just as fast. Up again, 23%. LCA, Golden Nugget Gaming, which is also merging soon, very soon. So LCA also have been popping, okay, although to a slightly lesser extent. Okay, maybe it's not because it's not EV, I'm not sure. Okay, but it also up massive, okay, and showing no signs. CIIC, boy, this one really shocked me, okay. Okay, normally, okay, you look at the chart pattern over here, okay, most of them, right, I see SBE, they dipped, okay, all these SPACs trick pretty similar in a similar fashion, but look at this, they dip, okay, and reversed, okay, all the way, haven't broke past the previous resistance, okay, but you can see that CIIC just, get out of here, he just exploded all the way up, okay, breaking the previous resistance at $27, just breaking past it, okay, PIC was having a small pullback yesterday, okay, and yeah, okay, so these are the basic updates for yesterday. Okay, insane week. Okay, now we're going to talk a little bit more about the very juicy stuff, okay, the very delicious stuff. So these are the key points, okay? If you take nothing out from today's video, this is the thing that you really need to remember, okay? So one key thing that I'm looking for is price rejection. Pretty simple, right? Okay, but in this simple phrase, right, has a lot of meanings to it, okay? So price rejection doesn't mean a small pullback, okay? So example, you learn to look at PIC, right? It's not this kind of small pullback. Oh, okay, this is in a sense a form of price rejection, but this is not the price rejection I'm looking for. I'm looking for huge price rejection where the stock is making lower highs. Sorry, oops, I typed wrongly for this. Okay, lower highs and lower lows. Okay, not concerned with the small pullbacks, but more the recovery that is not as deep as the pullback. Okay, so what do I mean by this? Okay, let's give an example of hyln. Okay, so hyln, okay, reaching up to the some point of time, right? Okay, so I'm not concerned about this. Okay, see this pullback over here, this small pullback over here, this tiny pullback over here. I'm not really concerned, okay, if it pulls back. But the concern is, right, when the recovery, the next pop up, right, it's not as high. It did not reach the previous high of $55. It starts going down at 53. Okay, and when it starts dipping again, right, okay, this is a little bit concerning, but once it dips up again, okay, you can see that it did not hit the previous high of $53. It started making lower highs and lower lows. And that's where you should be more concerned. Okay, and if it starts making higher highs, okay, most of the time I'll actually think of it as a very huge price rejection. That means a lot of people are not really buying into this stock anymore. The hype is kind of over. And I would actually start to reduce my positions. Okay, that's not to say that, you know, the market can do anything it wants. You know, you can always make lower highs, lower lows, then it explodes up. But the thing is, we're talking about probabilities here as a trader. Okay, and just a disclaimer, you know, by the way, this video, this trading of these SPACs are not for my long-term investors. Okay, long-term investors, please, if do not follow what is going on in this video. Okay, this is more for my traders. Okay, long-term investment wise, okay, if you do your due diligence on each of these companies, right, then you want to get in on these companies, I would suggest you wait for, you know, after the SPAC merger is over. Okay, after all the volatility is done, right? Okay, my long-term investors, you can then start adding your positions and starting your positions. Okay, back to my video. Okay, so yes, you know, okay, so that's what I mean by price rejection. Okay, so very crucially, okay, we look at the two leaders, right, in the charging space. One switchback, one is QuantumScape, right? It's a lithium-ion battery producing company. Okay, both of them has been trading very similar. Okay, what I'm looking for now, right, okay, is tomorrow, will it break past this previous high? Will it break past this previous high? Okay, if it explodes up all the way, okay, breaking past, okay, then I can kind of know that, no, the hype is still going. Okay, the hype is still going very strong. Everybody is still throwing their money, you know, like, wow, throwing to a stripper, you know, just throwing all their money in, okay. We know that everybody is throwing all their money in. Okay, SBE as well. Tomorrow will be crucial. Okay, you can see that after hours start slowing down, okay, but this is not super important. But when today, which is the video is going to be released on Tuesday itself before market open, okay, I want to see very strong move breaking past the resistance level. If it doesn't, okay, then I will have to monitor very, very closely. I will start to get a little bit more worried and a little bit more fearful. Okay, you must, as a trader, you must always, you know, minimize your losses. So that is one of the most important principles that I have myself. Okay, so cool. So then after I just talking a bit more about the price rejection, okay, you get my point. Okay, this is the one thing that you need to remember. Okay, now next, right? Okay, I'm gonna tell some of those people, you know, some of those my fans out there, my subscribers out there, you know, people that are up huge, right? Okay, can start to take some profits. Okay, especially those with a large percentage of their portfolio in. Okay, disclaimer: this is not financial advice. Okay, this is what I would do. Okay, especially if I'm going a little bit more heavy on these stocks itself. Okay, so they're up really massive, right? Huge, right? Okay, can start to take small profits on every single pop. Okay, I've been doing my own DD and my own hype research, right? Okay, I can feel that people start to getting a little bit scared now, and when fear is starting to build up a little bit more, okay, the hype will die down quite soon. Okay, so be a little bit more fearful, okay, start to take some small profits here and there, you know, start reducing your positions, you know, and maybe if you want to, you know, can start taking the initial investment out if you have already invested like a huge amount. Okay, so this is more for risk management wise, okay, more for risk management, okay, risk management, okay, right, cool, smiley face, all right, okay, can, so important, okay, so right, so now let me go to the last few parts, right? Okay, so those who are very fearful about, you know, the third point, you know, those who are fearful of the parabolic run-ups, you know, this kind of like, oh, you look at this kind of like HCAC, what is going on? What kind of chart is this, man? Look at this. This is unheard of. Okay, this is unheard of. I never seen such a steep increase. Okay, this is steeper than like any hill that I've seen before. Okay, I don't know what I'm saying. Okay, but yeah, but you get my point. This is so steep, right? It is. I can't even imagine. It's almost a straight line. It's almost a vertical line. Okay, what kind of BS is this? Okay, but I can understand people why they are fearful, you know, in putting money into this, because I normally wouldn't do that as well. But however, you know, you can't underestimate the hype behind these SPACs. Okay, sometimes it's just sometimes it's free money because there's just too much hype around it. Okay, you just need to trade very carefully around these. Okay, so you can see, you know, those people who are very, very scared of these, okay, don't force yourself. Okay, if you're uncomfortable with the risk of holding these kind of stocks overnight, right, you're uncomfortable with, you know, tanking of 10-20% of a portfolio from this, right, okay, then honestly don't force yourself. Okay, it's not worth, you know, sleepless nights, okay, getting stressed over this kind of thing, because, you know, after all, we invest, or we are trying to make money, you know, we're trying to make money to get more freedom and to get better quality life. Okay, but you're stressing every day because of this, right? Then there's no point. Okay, so maybe you want to, if you feel uncomfortable with this, maybe you still do want to get like some skin in the game, right? In the SPAC game, right? You know, get some of those nice profits, because, you know, FOMO, you know, you just want to get in a little bit. Okay, maybe you can get other plays that haven't been running up yet. Okay, so that's where I talk a little bit more about like other SPACs like GRX as well as INSU. Okay, so what are these two companies? Okay, GIX is a company that is merging with can't remember the name. Okay, so the name is Up Health, if I'm not wrong. Okay, Up Health. Yes, Up Health. Okay, so it is think of it as a smaller Teladoc. You know what's Teladoc? Teladoc. Okay, Teladoc. Okay, Teladoc company. Okay, this company honestly is one of my favorites. Okay, it's a telehealth company, which I think will be disrupting the healthcare industry next time, because virtual care, I really feel, is the future. Okay, so Metro Millet, right? Metro Millet, apparently what they do, they're disrupting some of the inefficiencies in the auto insurance business model. Okay, notably how consumers are charged. Okay, so instead of a standard flat rate fee, okay, the Metro Millet charges the customers based on their mileage, okay, which is able to measure via a device plugged into the vehicle. Some 2/3 of the US drivers are considered low mileage, and by charging per mile, Metro Mill says that customers can save 47% on average based on their previous insurer. Okay, right. So when you read this entire paragraph, right, what can you infer on this? Okay, so you know that Metro Millet is charging something cheaper. Okay, charging a cheaper product, a cheaper price for a product. Okay, that's what interests me. Okay, it's a good point for me. Not bad, pretty good. Okay, so, but however, you know, I can see that, you know, when they say some 2/3 are considered low mileage. Okay, so I can see from this business model, right, those that are driving, people who stand to benefit from this, right, is people who are driving very little. Okay, people who are considered low mileage, they're driving a little bit, right, they're able to benefit from, you know, like a per mileage kind of charging system, okay, instead of a flat fee. So if you're driving a lot of miles, right, a flat fee will actually be cheaper. Okay, so that's what I can infer from this entire region. Okay, so now I read a little bit more to get to know a little bit more about the company, right? Okay, they developed a mobile app, okay, to allow the users to file claims, you know, alerting the driver of possible parking violations, yada 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 yada, a lot of data. Okay, so yeah, it's a digital company. Okay, interesting. All right, the next, right, okay, this is a very interesting part. Okay, so I always like to see, you know, like all these kind of what the company says about their own company. Okay, but the thing is, it's very biased most of the time. Okay, let me just take a look at, you know, the PowerPoint presentation. Okay, let's look at the PowerPoint presentation. Very good. Okay, overview of Insu acquisition. Okay, let's take a look. Okay, interesting. Okay, very good, experienced leaders. Okay, they see this app they are paying for the, you know, like the mouse charge. You know, okay, interesting. They offer something like data science company focused on auto insurance. Interesting. Okay, look at this. So for me, I'm really skimming through, you know, because, you know, doing your diligence is very tough. Okay, but you need to skim through and find the most like juicy parts, right? The most important parts that you really need to find out. Okay, so this disrupting, built for the individual, blah blah blah. Okay, high margin, interesting. Yeah, high margin, I would agree, because definitely anything that's on digital automation, right? Okay, they're able to spend low cost, but however get more revenue. Okay, pretty good. Seems interesting. This is more of selling their products. Okay, how much savings they have. Okay, then all these reviews per se probably will be good ones. They won't put bad reviews on it. Okay, so very bullish. Okay, very nice. Wow. Okay, interesting. Okay, good. Okay, interesting that we're driving down a moment. Okay, so what I'm going to do is, okay, I'm going to look at this. Is important. Okay, so you look at this. Okay, consistently improve our units. Okay, contribution margin increasing. Okay, good. I like to see some numbers. Okay, good. Lemonade. I didn't really read through this beforehand. Okay, honestly, I didn't read through this before, but they're comparing themselves to Lemonade as well. Okay, they're saying their industry leading metrics. Okay, LTV to CAC 3.1. Okay, they're only using this metric. Probably they are losing in some other metric. Okay, but they're choosing to use this metric. Okay, but however, this metric does show that, you know, its LTV to CAC is really attractive. Okay, interesting, not bad. Okay, you can see their 1 year retention rate is pretty high as well, on par with Lemonade. No, not bad. Pretty good. Okay, so good. Okay, then I go all the way down, to the juicy parts, right? Which is yes, the juicy financials, right? Financials wise, okay, this is 2019, 2020. Okay, we see that they are non-cap valuations. Okay, I'm gonna look at their income statement. Okay, income statement, interesting. Okay, income statement, you look at this, $33, right? 2018 to 2019, let's see how much. Okay, total revenue wise, they are actually decreasing on their total revenue. Okay, interesting. They are increasing massively on their other revenue. Okay, interesting. Okay, so what can you infer from this? Okay, they are actually making a bit less revenue than normal. I smell a little bit the spice here. Okay, okay, it's not increasing their revenue. Okay, sure. Okay, then gross profit wise, okay, they are, however, their bottom line is actually decreasing. Okay, as in they're actually not spending so much. They are not losing a lot of money compared year over year. Okay, interesting. So they're actually cutting their expenses. Okay, which I see is a good thing. Okay, that, compared to a company that just bombs everything. So in a sense, year over year they're actually suffering lesser and lesser loss. Okay, loss from operations. However, they have a lot of other operating expenses which has been increasing, such as sales, marketing, and acquisition costs. Okay, interesting. Okay, so overall, okay. So what is the difference between gross profit and loss from operations, right? Gross profit is, example, you take a bread. Okay, let me give you an example. You take a bread, right? You sell the bread for $2. Okay, so total revenue will be $2. But what is the gross profit? Gross profit is the cost that you sell the bread for $2, but the ingredients they use to make it is like $1, all the flour and whatever. So the gross profit will be $1. But however, to let people know about your bread, right? You need to market to people. You need to do advertising and stuff. Okay, so advertising might be $2. So $2 minus $1 minus $2 is minus $1. Okay, so you can get what I mean. So net loss, right? Loss of operations is total amount, everything add together, how much you lost. Okay, so actually they are losing year over year. Okay, then I'm smelling a little bit. Okay, not very, very good. Okay, so pardon my moaning, but yeah, it doesn't seem very nice. Okay, and actually I wish to go on further, to explain everything. But however, I wanted to make this a very quick video, and I'm pretty sure most of you don't watch such a long ass video. Okay, so this is just a very small breakdown. Okay, of all the balance sheet. If you really want me to go through everything, right? Okay, then maybe request it in the comments below. I'll actually do it for you. And yeah, so another great options or another great way that I actually do this, right? And do my due DD, right? Okay, see all these investor presentation, always they'll present the best side. So we want to look at the side, the not really good side as well. So I'll actually go and look at all the reviews out there. Okay, what are people actually thinking about this company, the on the ground people? So this will actually give you a more down to earth view about this company. What does it do? Okay, and we come back to this right? Okay, so yeah, so I kind of roughly taught you a little bit more about how to do your own DD. How do you look through? How do you understand and how you really look through articles? See through what are the good stuff, what are the not really very good stuff. And really look at the good and the bad side of the company itself. Okay, but however, I feel like although these companies are all most of the time they are right, they're not super good, right? But however, because there's so much hype around this, right, you still can make money off of this like hype. Okay, and that all these SPACs, right, their base level or their lockup funds, right, before the merger, right, is $10. So that's around $10 is like $10 or $9.50, the lowest it can go before the merger. So if you can see stocks like GIX and NISU, right, NIAQ, right, most of them only have $2 downside, $1 downside, but have massive upside potential. Okay, $2 downside to $10 and massive upside potential. So the risk to reward here is pretty attractive. Okay, so it's really up to you to think, whether you are going to trade this. Are you willing to trade this? Your own opinions on this. And I really want to hear from you as well. So do comment down in the section below. What do you think of Metro Millet? Okay, Metro Millet. Okay, so yeah. And I really want you to be an intelligent, independent investor. I'm just a financial bro. I'm giving my opinion with whatever experience that I have before as an ex-financial advisor. And ultimately, only you will do best with your own money. So, don't be lazy and do your own DD. Okay, so yeah, write down in the comments below. You tell me, whether Metro Millet is a good company, And, for those who are interested, go do some research on GIX as well. And let me know in the comments below. Yep, and that's it for today, boys. Okay, if you really like the video, like it, it really encouraged me, to put out great content like this, to talk to you guys about all these kind of things. And if you haven't already, subscribe to the channel, subscribe to us, and it'll be a fun ride. Okay, and let's hope we make some money. Stock and stay out.